That was the American President Joe Biden saying that the American banking system was safe and that the taxpayer will not bear any losses. However, he did say that they will hold those responsible for that accountable. But moving on, with an aim to consolidate market leadership in downstream supply chain financing, Mintify raised $110 million in its Series D funding round. With the fundraise, the company aims to not only deepen presence across key sectors, but to expand on its new offerings and bolster its tech infrastructure. Now, the round was led by Premji Invest, with participation from existing investors like Norwest Venture Partners, Elevation Capital, and International Finance Corporation. Joining us now to discuss the company's growth strategy is Anup Agarwal, the co-founder and CEO of Mintify. Anup, thank you so much for joining us on the show today. Let's straight get into it. What are your current products that you have on offer? Any new ones in the pipeline? What will the focus be going forward?
Sure. First of all, thank you so much for having us here. Our main focus has always been on the downstream supply chain financing side, right, where think about a structure where we partner with some of the leading corporate partners in India to work along with them across their supply chain to offer inventory financing solution to their distribution partners. These are typically what we call as a long tail of the supply chain, where they are micro enterprises looking for working capital to buy inventory and grow their businesses. Initially, we were only focused on what we call as a primary sales, that is between the corporate to their distribution partners, the typical wholesalers, stockists, distributors, and so on and so forth. As we're expanding our business, we are also getting further downstream to the retailer side of the network as well, where we are financing the entire retail chain as well. And that's where we are seeing massive opportunity and growth for us, going forward.
All right. Now, Mintify plans to use a large part of the proceeds to expand its loan book and focus on growth of disbursals on the platform. So talk to us about where your loan book currently stands and how much do you plan to grow it by? What about NPAs?
Yeah, so we've been growing pretty rapidly. Last just about 12 months alone, we have seen about 300% growth in our overall loan book. As we speak, currently we are at about $150 million of loan book, which will easily expand to at least about $400 to $450 million by March 24. So another about 200+% kind of a growth. A large part of the proceeds will go towards financing this growth on the lending side, but equally important is we are also building a lot of SaaS-led solutions for the entire supply chain. So when you talk about supply chain, it's kind of an ecosystem that you're operating. It's just not financing. Financing is just one aspect of the overall business that you do. But across this network, be it a corporate to the distribution partners and the retailers, there's a lot of friction that exists in terms of the way you collect the payments, the entire order to cash cycle and stuff like that. Mintify as an organization is building one single stack to ensure that the entire ecosystem can be brought on a single platform for doing multiple services, and financing being certainly a core of one of the solutions that we're going to offer to our corporate partners.
All right. And what are the ticket sizes of the loans that you currently have, and how much have you disbursed so far? What's the target going forward?
Sure. So we are fairly granular in terms of our loan book. Our average ticket size is about 15 lakh rupees. We've overall, for the last 5 years since we went live, we've already disbursed about $1.7 billion worth of financing across about 20,000 plus SME partners.
All right. And like you said, purchase financing is a $50 billion opportunity, and that's what you're going to focus on. So what's the traction you're seeing? And will this be the primary solution that you'll focus on? What are the targets that you've set for yourself on this front?
So, as I was saying earlier, the opportunity is fairly massive. We are talking about at least, if not more, a $50 billion opportunity, which itself is growing at about 10 to 15% year on year. So imagine a situation where any receivables which is sitting on the balance sheet of any corporate partner, be it in FMCG, pharma, kitchenware, consumer durables, the entire ecosystem where the corporate has to extend credit to their distribution partners for them to buy inventory, and the distribution partners in turn having to offer credit to their retail partner. That entire ecosystem has receivables outstanding. And the reason why there is a receivable, because they are dealing in turn with smaller and medium enterprises which do not have access to working capital. As an organization, we are very focused on ensuring that that entire receivables can be liquidated in the balance sheet of these corporate partners, and Mintify in turn can step into the shoes of financing these SME partners. Now, that opportunity itself is very large. My belief is that over the next probably 3 to 5 years, we can easily build at least a $2 billion financing book. But in addition to the financing book, we'll also build a lot of services layer, which is going to be a fairly significant part of our overall business.
All right. In fact, Mintify has grown about 4 times year on year. Where will you end this year in terms of revenue? And what's the road to profitability looking like?
So maybe I'll just take the second one first. We've
Okay.
always been super profitable. I think
Okay.
one thing as an organization that we've always strive towards is on the unit economics side. Unlike a lot of companies and the flavor of the season, everybody's talking about profitability. But let me emphasize it here. Even in FY 21-22, when we were in the COVID year, we were a PAT positive company. As we speak right now in the FY 22-23, we are already hitting an ROE of about 12%. And
Okay.
next year, we will easily hit an ROE of about 16 to 17%. So we are a very, very profitable company and very focused on the overall unit economics.
All right, focused on unit economics, and you are profitable. Now, you work closely with over 100 leading brands across India, which includes Tata Motors, Jockey, Finolex, Varun Beverages, etc. So how do you plan to grow your client base, and what's the expansion plan?
So this is, think about it like a SaaS solution where you have to do a lot of enterprise sales. It's not easy to kind of onboard some of these large corporate partners. But I think a combination of the tech solution that you offer, the understanding that you have about these industries, and of course a fairly massive distribution network, because eventually you are dealing with corporate partners who have billions and billions of dollars of sales, having a massive distribution network on a pan-India basis. You cannot just be offering this solution to them in a particular region or in a particular division of theirs. So as an organization, we built a lot of expertise in order to ensure that we are able to cater to these corporate partners. We believe that there are at least about 5,000 plus large enterprises in this country who need a similar solution that we are currently offering. We are only at about 150. We can easily tap in at least about 1,000 plus corporate partners over the next 3 to 5 years.
All right, 1,000 plus corporate partners in 3 to 5 years. All right, Anup, we're completely out of time. Many thanks for joining us on the show today, and we wish you all the best going forward.
Thank you. Bye-bye.
All right. On that note, it is time for us to head into a short break. But trucking marketplace Raho has raised 20 crore rupees